In this video, we're going to be talking over EURUSD from a fundamental and technical perspective. So let's get into it. Now, first of all, I want to briefly cover the fundamental backing for the US dollar because that has changed a lot over the past month. At the start of March, we were looking at a hawkish Fed. They plan to raise interest rates continually throughout the year, and Jerome Powell even hinted that they may have to be more aggressive with the interest rate increases. However, the dramatic increase in interest rates caused a lot of problems in the banking sector, and we saw a mini banking crisis with Silicon Valley Bank, Signature Bank, and others collapsing. This led the Federal Reserve to slow down their policy, and data which has followed on throughout the past month, showing that their plan is working to some degree, has allowed them to ease off the tightening policy and take a little bit more of a relaxed stance to the interest rate increases. So now the general consensus is looking towards a 25 basis point rate hike in May, and then following that, maybe a rate pause. So no more interest rate increases for a while until they cut rates later in the year. Now, this stance from the Fed is what we call dovish. Okay, they are not taking the aggressive position here. They're actually taking a bit more of a defensive position with their monetary policy. Now, dovish policy is generally going to be bearish for a currency. And the reason that we can expect the US dollar to fall as a result of the slowed down monetary policy is that without interest rates going up, there is less incentive for foreign investment to flow into the US dollar. It's a highly inflated currency with a lot of economic problems behind it. And if investors are not going to get a high yield from holding in that currency, it makes very little sense to hold wealth there. So throughout the second, third quarters of the year, I do expect the US dollar to start declining as they slow down with that policy and other recovering currencies catch up. Now, very briefly on the topic of the euro, the European Central Bank is a fair bit more hawkish than most of the other central banks due to their high inflation rate, and they are planning to continue with interest rate increases for at least the next couple of meetings. Now, if they go ahead with this would give value to the euro for foreign investment, and foreign investment may flow out of the dollar towards assets like the euro. Therefore, Euro USD would be bullish. So the long-term picture points to more upside on Euro USD. However, what we recently saw just on Friday was very positive consumer sentiment data and some retail sales data as well that drove the dollar up. This caused a big sell-off on Euro USD, and that sets the backdrop for my new trade ideas. So let's head over to the charts and I'll show you those now. By the way, before we go any further, I am now trading live with my team every single day. If you want to get access to all of my trades, join a network of over 1,000 global traders, trade live with me every day in London session, get access to all of my trades in real time, see case studies of every position that we take together as a team, and get personal support from myself and other six-figure funded traders, then check out the link in the description and you can join my trading community. And this is also available on a subscription basis. Check out all the information in the link in the description. Let's get back to the video. Okay, so looking at the daily time frame here on Euro USD, we can see that for a month we've been rallying and we traded into the 1.10750 key level. Now, this is a key psychological level. Anything that ends with 0, 250, 500, or 750 is a key area for reactions, as you can see perfectly demonstrated here. Now, after reacting from that level, we did fall around 130 pips, and my first trade idea for this week was actually to bring price towards this demand zone by selling on the lower time frames. However, unfortunately, I was never given the confirmation to do that, so price has actually just rolled down all the way towards the target that I was looking for. So what am I looking for now? Well, as I mentioned in the fundamentals section of the video earlier on, I am looking overall for a stronger euro and a weaker dollar. So that will be leading Euro USD further to the upside. However, with how price structure is formulating right now, it's possible that we continue a little bit further to the downside. So by looking at the 4-hour time frame, you'd see that the obvious area for buys would actually be this zone here, okay, based on supply and demand. However, what we've also got is a little bit of trend liquidity playing a part like this, okay? And we're coming in now for a retest on that level. So what I would actually anticipate here is a potential liquidity sweep of this trend liquidity, okay? It's very picture perfect for the market to pull into this level, react from demand and the trend line, then push to the upside. And as we can see, we have a previous support turned resistance, which would sit somewhere around this level as well. As we can see, resistance, 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 and then we broke. And now this would look to the majority as a support. So now it is possible that the market reacts from this point, and we can watch this kind of area for a confirmation perspective to see if we can get a confirmation entry to take the market higher. However, due to all of the liquidity concepts, right, and the fact that this looks like such an obvious zone, I would actually anticipate that euro could fall a little bit further. Now, we do obviously have this massively obvious demand back here, which is still in balance, but this is quite a far way down, and unless dollar fundamentals pick up over the next few weeks, it is likely likely to be rather difficult for the euro to get all the way back down there. So we can keep this as a consideration, but for the meantime, we could also focus on some nearer zones. So zones that spike my interest are this one just here, being a kind of inducement zone below this area. But I also will keep an eye on kind of this larger range just here. And the reason for that is we could simply sweep this range, retest this real demand point here. We could actually divide that into two demands, being this one here and also this one here, and potentially then react from there. So really what I would love to see is what we see happen quite a lot. I would like to see a false breakout of the trend line and this support floor to entice sellers into the market, to pull us slightly lower and then actually react and begin pushing back to the upside and continue in that larger trend. So how exactly will I approach this market then? Well, I'll be focusing first of all on these two areas for my buys, and I will do this with a confirmation bias in mind. So I will actually want to look at the markets and see if we get a shift in the trending structure when we come into these levels. If we get the shift that we want to see, then we can actually begin looking for long positions from one of these 2 points. Now, we can, of course, keep in mind this level, but for me, this is going to be quite a difficult level to trust with all of the confluences around it from a basic retail perspective. So I will watch there, but I'm more vigilantly watching these areas below for those reactions, being these imbalanced demand zones beneath the points of liquidity. Okay, these are the points that I like the most for this kind of trade. And if we do get the reaction from there, then I will look to buy. Now, we could also look for selling opportunities on the way down. But in order to do that, I would like to see this area give way so there were absolutely no confluences holding the market up. So if we do get that continuation of dollar strength, the market pushes through this low, we could then begin to focus on supply here or supply in the range for a pullback and a sell down. So this concept would coincidentally essentially flow with the trendline break retest. But usually we do get a nice little start off of a trendline break and retest, and then things flip around. So if we can just capitalize from supply zones, if we get a structure break, we could get a really solid trade there just to bring us down towards our buys. Now, if we do get into any shorts, what I would be doing there is looking to hedge those moves. Because if we can sell at these areas and the market does continue to go lower, we can profit on the shorts all the way down. And then if we buy against the hedge short, that means if the market flips and goes to the upside, as is currently the most probable due to fundamentals, then we can profit on the buy side and our sell side trades will just get stopped out for break even. So to break it down, I like these areas for longs, and then I also like this extended area, but I don't know if fundamentals will allow us to get that far. This area here seems a little bit too blatant to me, but we can watch it for reactions because we don't want to miss it being too hesitant. If we get a serious push to the upside and break some structure from here, I will then be interested in looking to take the market long from this point. But at the moment, I think these key areas below are the more favorable areas for me to buy from. And if we can come and break through these levels, showing a break of structure and a demand fail at this level, I would then like to see pullbacks for short opportunities to bring us through into these long points of interest. That is what I'm looking for this week on EURUSD. So I hope you can get some profitable ideas out of this, and I hope you benefit from the fundamental and technical analysis that I put across. Now, if you want to trade live with me, make sure you check out that link in the description that I mentioned before. There's so much value in our community, and I know that you will love it. That's all from me. I hope you enjoyed the video. Thank you for watching, and I'll see you in the next one.